Hello and good evening. Welcome to our webinar tonight. And let me just quickly fix that little microphone glitch in the background. But give me a second and I'll fix that. Rightio, sorry about that. It happens when you have two computers running in the background. Rightio, well, my name's Campbell Venning and I'm going to take you through tonight's presentation on a bit of an update on the Christchurch market with some new projects that we've got. And it made me realise that I haven't done a webinar for quite some time, so I'm a little bit rusty. So forgive me if we get a few technical problems on the way. But also, it also reminds me of when we were doing one, sometimes two webinars a week back in COVID level 4 and level 3 times. So, yeah, unfortunately, Auckland is now in level 3 and the rest of the country level 2. And a little bit of uncertainty in the next few days and weeks. But we were talking today in the office, and I guess one of the other things is we also know what it's like to be up to level 4. So it's not the sort of same scary uncertainty that we had before. So I'm not going to talk much about COVID because there's so many unknowns. However, I think as a country we're probably more prepared than we were last time because we've been here before. Hopefully this community outbreak can actually be contained a bit better. So just a quick agenda that I'm going to take you all through. We're going to have a bit of a New Zealand, then a Christchurch property market update as of August this year. I'm going to then look at the infrastructure projects that have recently completed and soon to be completed in Christchurch. They're worth noting because the impact they're going to have is, in my opinion, or our opinion, significant. I'm going to talk about different product and why we're now moving to house and land as well as townhouses and apartments. Then I'm going to talk about population growth in Christchurch CBD and a bit of a snapshot of some of the projects that we're about to release in Christchurch. And then we're going to do a Q&A session at the end. So if you're not familiar with this software, in your screen you've got a Q&A box. You can click on that and write a question, and we will go through those at the end. So if you see something that you want to know more about, please write that down as we are talking about it, because we will come back to those questions as we go on. So yeah, so let's have a quick national then Christchurch property market update. But before we do that, every time we have one of these webinars, we've always got new people. So just for the benefit of those new people, Property Factory is a solution for builders, developers, vendors who need volume property sales, and it's also a solution for property investors that want direct access to what we deem wholesale deals. We aim to provide opportunities that are better than the market can offer, because we're talking to vendors and developers and builders in bulk numbers, and what that allows us to do is, I guess, negotiate deals with a better than standard. So our business is sourced and sold over 2,500, we're actually well over 2,500 now properties, we need to update that, over the last 25 years, and we're probably close to $1.1 to $1.2 billion worth of real estate now. And I guess in terms of our business, we've got over 125 years of combined real estate experience amongst the team. We're a national business, we've got people across the country. So I like to think that we have good judgment, good knowledge, and good experience that we then impart with our customers. So if you're a first timer in the business, on one of these tonight, that's a little bit about us. And to get access to our deals, you have to be a member on our website, and I'll give you a quick snapshot of that later. So there's a good opportunity in these webinars to give you a national market update, and then today we're going to talk about Christchurch per se. So one of the things there's a number of economists in the country, and Tony Alexander is probably the most property savvy, and he puts out a monthly view of life in the economics world, but a lot of his comments are around property, so he's quite astute in the property sector. So this is a summary of where Tony sees things as of last week. Strong market out, still strong property market to continue. He expects it not to change. 102,000 net people hit New Zealand in the last 17 months to May of this year. So that's having a huge impact on property. These expats and migrants that are getting, or Kiwi residents are coming back to New Zealand, buying houses or renting houses, and that's off the back of a shortage that's been real for a long time. So you've had this great big increase, and I expect it to continue for a number of months to come as the rest of the world still battles with COVID. This is one of the things that's keeping our market so strong and buoyant right now, is this net migration inflow. 102,000 people in the last 17 months. That's pretty significant. Tony expects unemployment to sit in that 5 to 5.5% level, which I'm surprised. I thought that's a bit low for him. But again, he hasn't seen any signs to give us concern that unemployment could hit double digits. He also expects interest rates to drop and house prices to continue to rise across the country. And the only areas of concern that he sees are Invercargill and Queenstown. And reality is housing is still undersupplied, and with interest rates dropping, demand typically then takes over for the want of getting into a flash of property for less cost in terms of funding, allowing your deposit to go further. So that's his views for August. But he did another thing this month. He had the Real Estate Institute of New Zealand did a survey with Tony, and this was quite interesting because and you can download this off the REINZ website. And the two parts that I took out of this were, so they surveyed a whole bunch of real estate firms and agents that were dealing with buyers and vendors. And it's a much deeper report than these two graphs, but these are the two things that I took out of it, which I found was very interesting. And the first one is the factors that are motivating investor demand. So these were investor-specific questions that he did in his survey with the Real Estate Institute. And, interest rate levels are the number one reason that are motivating investor demand. And that's no surprise. You can borrow money now for 5 years and lock it up for 3% odd. You can borrow money for 1 to 3 years and lock it up for mid-twos to high twos. I mean, we've never seen that in New Zealand ever. Second highest thing that investors are looking for is a bargain. And that's very normal. 60% of people that were surveyed are still looking for a bargain. But obviously, it's still not stopping them buying, even if they can't find a bargain. And when you're in an undersupplied market, it's hard to get deals. But the bargain right now is the low interest rates. Most people, the next biggest group, 20% of the market of investors that they surveyed are investing for retirement, which makes sense. And expectation of price rises. Only 10% of people actually expect prices to rise, which I found surprising. Whereas I'm expecting prices to continue to increase, as does Tony, and that's a supply issue. We don't have enough houses to satisfy demand, and that typically increases prices. Interestingly enough, this is now going back to May, June, July, and August. The number of investors that agents are seeing in the market is increasing every month. And, 30% of the buyers that were dealing with agents in August were the investor market. So we're seeing more and more investors come into the market. That's going to put more pressure on prices as well as owner-occupiers or homeowners. So that's just going to make competition tighter, and it's obviously going to push prices up. So some interesting things there from Tony's survey. If you Google Tony Alexander REINZ survey, you will find that report. And if you just Google Tony Alexander, you'll be able to look at his monthly view, and you can go back and get older ones as well. So that's kind of a national update on the macroeconomic picture. Let's just now look at a few other things that are adding to the Kiwis moving home. We've got we've had an increasing population for some time, but we had the fastest increase as a country by 1 million people in the 17 years to March of this year. So we've never actually grown as quickly as that. And there's another 80,000 people forecast to grow in this country in the next 12 months. And if you factor that through to property, that's 35,000 houses or dwellings short on top of the current shortage. So we're not going to have an oversupply of real estate anytime soon. The magical number used to be 50,000, and we're forecast to grow by 80,000 people in the next 12 months with 35,000 houses required to meet that demand. So New Zealand's under population pressure, interest rates are low. And now let's jump down to local level, because this presentation is going to focus on Christchurch. But estimated population in Christchurch at the moment is just under 400,000. And as you can see in this graph, the expectation is that that's just going to continue to climb for a whole bunch of reasons that I'm going to cover in a minute. But they say there's just under 4,000 people now living in Christchurch. And if we look at stats forecast from that number, they expect it to go 424,000 by the year 2028. And there's low, medium, high forecasts there, but this is where projected population around the country, the Statistics New Zealand does this. So comfortable in a major city, second largest city in the country, that the population is going to increase by nearly 10%, or nearly just between 5 and 10% in the next 8 years. So that gives us comfort that everything's going to go up, from number of people, expected demand for property, and pool of tenants, because as an investor, your customer is the tenant. So no signs there of decrease in population, because back in 2011, the Christchurch population actually did decrease after the tragic earthquakes in February 2011. So completely different story now, and hence why the housing that's being built here is all being very much occupied by owner-occupiers or tenants. So let's now look at Christchurch in context to the rest of the country, and this just blows me away. So we'll first look at incomes. 41,800 in Wellington CBD is the median annual income. Auckland's 34,400. Christchurch, and this was in 2018, it's the last time they did this survey. This is Stats New Zealand again, but Christchurch 32,900. Not a huge swing there between Christchurch and Auckland in terms of median incomes, but look at the average house values. Auckland, 1,080,000, Wellington, 894, Christchurch, 518. Now, if we extrapolate that out for the last 2 years, Auckland's gone up a bit, Wellington's gone up a bit, and Christchurch has gone up a fraction. So we're still very low, or ludicrously low in my opinion, compared to the rest of the country. And then as an investor, let's look at those rent levels. Auckland average rent is, weekly rent is 563 right across all dwellings. Wellington 531. Dunedin is now higher than Christchurch, which is madness. If you look at the rental market in Dunedin compared to Christchurch and just sheer volume, it's not even half of the size. So to think that it's cheaper to rent a house in Christchurch than Dunedin says one thing, and that's Christchurch is grossly undervalued. $430 a week in Dunedin isn't out of control as a price, even 563 in Auckland, but 396 when you're comparing almost a brand new city against an old cold one like Dunedin, a congested one like Wellington, and a very sprawled out one like Auckland. Christchurch is a ludicrously cheap place to buy, 518, cheap place to rent, 396, and the incomes aren't that out of control compared to Auckland and Wellington. So that's just numbers that were taken 2 years ago. So let's look at those major cities over time. Let's go right back to 2000, which was 20 years ago. Everything tracked pretty similarly until 2011, when Christchurch pretty much slowed down compared to the rest of the country's growth. If you can't read those, the high blue line is Auckland region, the brown line is Wellington region, the green line is New Zealand as a whole country, the yellow line behind that's Hamilton, and the flat ring line that we've got there in the middle is Christchurch. So Christchurch just doesn't make sense, but when you go back to how much destruction was caused in the 2011 earthquake, it does make sense. So in our opinion, Christchurch is still the the most safest place to invest, because population's rising, interest rates make pretty much everything cash flow positive, but we still are very fussy with what we pick here. But more importantly, these prices can't continue. They have to start going up soon. And then if you look at the South Island in isolation, the top line's Queenstown Lakes District, which isn't surprising. It's well over the $1 million mark. The purple line is Wanaka, and the green line is Invercargill. Sorry, New Zealand. What am I talking about? The light green line is New Zealand. And then you come down to Dunedin, which is now the median sale price in Dunedin is now higher than Christchurch, which again doesn't make sense to me. And then Invercargill is the only other place that's less than or lower than Christchurch and Dunedin. So as an island, you know, we still have our hot markets, Queenstown and Wanaka, but they're under serious spotlight at the moment. Then if you look at the other four locations, population-wise, Christchurch should be the leader there, but it's just pulled back because of those earthquakes. So we see Auckland infill housing as and Christchurch as the two, or the Auckland region as the safest places to invest. Auckland's been flat now for 4 years, or just under 4 years, and that's because of the infill housing that's the new product, let's call it, in Auckland. That's given that steep rise that Auckland had there for a while some, I guess, context to calm it down when it was screaming through the roof in 2016, 2017. So, you know, that's the metrics on it. Now let's look at Christchurch at suburb level. It's a pretty big place, and I guess in terms of there's a number of things that drive a market no matter where it is, but in Christchurch the earthquake rebuild has had a huge, I guess there are a number of parts of it that have caused that are driving what we deem as a cheap city, but the infrastructure spend is the number one thing because it takes a long time to build roads, to build properties, to build hotels, to build projects. But as we get into the detail, we can now see that we're very much at the end of this rebuild in Christchurch for the bulk of those things. So let's have a look at some of them. So the convention centre, which whilst doesn't employ a huge number of people, it brings a huge number of people into Christchurch. And that's a $500 million project, and it opens early next year. It's about 50 metres from our office, and it just grows all the time. And that photo is probably about 6 months old now. The cladding's nearly all up, and right in the centre of town. So that'll bring a lot of events into the city. It'll bring a lot of tourists into the city. And it's seen as, and that was one of the 17 infrastructure projects that were planned back in 2012 when they did the city's, I guess, long-term plan after the rebuild. So that's nearly finished. Then we've got the Metro Sports Centre, which is projected to open in 2 years' time, $300 million. And you can look at it on the map there. We've shown it in this map because it takes up 3 streets or 3 street faces. It takes up a whole block between, not far from the hospital at the top of the screen to the Morehouse Ave at the bottom. This is going to be huge, and from bringing people to the city and engaging with different sports and activities, this is a massive project for Christchurch, and there's 3 cranes on site at the moment. And then we've got the covered stadium, which is the last of the big projects, and that's another $500 million complex, and that's expected to open in 2024. That's the last one, and that's the one that's going to expect to take the longest. But let's look at some of the more boring things. The Western Corridor. So this was the road that links, well, it's open now, and that was that opened middle of last year. Off memory, may have been probably earlier than last year. It was the year before. So that's open. Cost between 300 and 350 million, and it connected the northern motorway with the southern/western motorways, which I'm going to take you through in a minute. Things like that sound boring, but 300 to 350 million bucks on roads does 2 things. It brings a lot of money into the region that gets spent on jobs, but secondly, it changes the transport time in Christchurch. So that was the first one, and we happened to be in Christchurch at the time. That's what I was trying to remember. It was last year, the year before. I'm pretty sure it was the year before. It was the first one off the block. But we did the timing in rush hour and out of rush hour, and it was just ludicrous at the time how quickly you could get from Belfast area, which was where it started, out to the airport, versus the old way, which took you through all the suburbs between Belfast and the Groins, which is just before the airport. So that's been going for an hour now, and it's part of this, what we call ring roads around the city. It was the #1 project. So that's open. The next one is the Northern Corridor. I can't imagine what this one's going to be like. As a teenager that grew up in North Canterbury, when you came into Christchurch from Rangiora, Kaiapoi, Wood End, you would go through all of the suburbs to get into the city, and that's what a lot of people still do today if they don't go through the airport southern extension. So that map on the left, which is, you can download these, you can watch the drones, but this extension is called the locals are calling it the Cranford Street extension, but it's the Northern Corridor, which opens the end of this year. We're talking a few months. And when you look at the scale of this, the commuting time that this is going to change, literally from the Waimak River into the CBD, is going to be exponential in terms of people's time expectations with travel. 300 million. They've been belting away on this for about 4 years now, I think it is. And yeah, commuting time from the Waimak River Bridge, which is where you cross and you can literally go right to the airport, left onto this once it opens, or straight up Belfast and all those suburbs. This is going to have a massive impact on commuting times from the north. And that's one of the reasons why now we are saying to clients, it's the time to look at house and land packages, townhouses in the suburbs like Rangiora, like Kaiapoi, like Wood End, and more on that as we get into it. So this one opens this year, and then we look at the Christchurch Southern Corridors, and this was 2 stages. The first one is open, and the second one again, like the Northern Corridor, $200 million project for the stage 1, another 100 million for stage 2, expected to open at the end of this year. So much is happening on transport infrastructure in Christchurch that it's going to change the face of commuting times around the city, which compared to Wellington and Auckland is already super quick. So, you know, when you see roads and roadworks, you think, oh, what a pain in the ass. But what it is doing, it's changing the face of the location. And all of these motorways are going from 2-lane to 4-lane. So it's doubling capacity, separating roads from big median strips, and just changing Christchurch's whole feel. So if you look at all of that added up, that's $1 billion of new roads. And I guess from a, you know, compare that to Transmission Gully or the big roading infrastructure that goes on, but that's being spent at the moment between Auckland, Hamilton and Tauranga. That's $1 billion of new roads still to come, and it's already a good city to get around. I can't imagine what it's going to make it like. And you better zip out to Rolleston very quickly, or you better zip out to Rangiora very quickly compared to what you can now. So we say that is creating jobs. It's GDP. It's an affordable city, and then it becomes a more livable city. So we just see Christchurch it's just going to be poised for more and more growth. Let's look at some of the other projects that are still to come. There's another $1 billion worth of hospital spending in the city, over 6 projects. There is another just under $1 billion of new roads and motorways combined. And then there's the convention centre, which we've gone through, the sports centre, the covered stadium. So that's another $5 billion still to come on all of those different projects alone. And that's not all of them. That's just the ones I've singled out. There's other initiatives on the table in Christchurch for growth. Rocket Labs are looking at establishing a base here. There's an Eden project, which some very well-known Christchurch long-serving citizens are trying to get out of the ground, which is a really good initiative that's come off the back of a London project. So these are just some of the things that we know about that, well, the big things, but some of the smaller things as well, which are going to have an impact on Christchurch's long-term population, long-term values, and also long-term livability. And we're sitting here in this stage at the moment with such crazy low prices, we just don't think it's sustainable. So I think we've had a couple of questions. I might just look at those unless David's going to answer them. Oh, he has been, so that's cool. So let's now jump to our property picks for August with some new releases coming. So up until now, we've been recommending to all of our customers that they should really focus on apartments and townhouses in the city But the number one reason that most first time and second time or even third time investors need cash flow property, which is the highest rent on the lowest cost. And typically in the product differential houses, townhouses or apartments, townhouses and apartments are typically the cheapest or highest returning product. When these roads open up, we're expecting capital growth in locations which are already well populated. North Canterbury and West is pretty much the main area of Christchurch which is being built in, and those locations have already been slowly going up, but we're expecting that to accelerate once all these once all this infrastructure is complete, with more people coming in, interest rates low. All we can see is prices rising. So that's the logic behind what we're talking about. So I've just highlighted 3 of our existing projects here. One of them's actually in Wellington, but I wanted to point it out because it's going to be sold out very soon. So because we are a national business, we think all investors should have product in Auckland, Hamilton, Tauranga, Wellington and Christchurch. So this is a project in Wellington which was only launched on the 31st of July, 28 townhouses, there's only 9 left. So if you haven't got property in Wellington, talk to one of our team, check it out online. Location is prime, it's in Lower Hutt. Price is well below the median price in Wellington, like a significant amount, and they're brand new properties. And they'll be completed at the end of next year. So check out the Lower Hutt townhouses that we've got on our website. Jumping to Christchurch, we are now sold out of the 2-bedroom townhouses at 350 Colombo Street. To date, that's been our highest returning product. So we're just saying to people, there's only 17, which sounds like a lot, but we sold 7 in the last 3 weeks. There's only 17 1-bedrooms left. If you've been looking at that project, please talk to one of our team in terms of putting your foot on something, because we don't believe they're going to last. Well, they're not going to last. And once we sell out of that project, people will kick themselves that they didn't get in on it, because we've now got over 30-something new investors in there. Everything's rented, one that was sold in the last in the last week. So vacancy in there has been pretty much nil, and it's because it's one of the only new complexes in the location in a prime suburb of Christchurch, 1.4 k's from the CBD. So if you haven't seen 350 Colombo Street, please talk to one of our team, because it's not going to last for much longer. And last but not least, of an existing project, we've only got 7 townhouses left with a discount to an old valuation, and that old valuation is nearly a year old, so we expect that to have lifted. So there's discounts of a 12-month valuation of up to $32,000, and these are priced between around 518 on a value that's a year old at 550. So we expect that 550 to be higher. These are 2-bedroom, 2-bathroom townhouses that are nearly finished. They'll be finished before Christmas. 121 square metres. I was on site yesterday. In the next week, we'll have updated drone and video footage. And if you're wondering why the early videos I was wearing a jacket and I wasn't at the end, is that I managed to get plaster over one of my nice jackets. So that was a bit of a downside for me on doing site visits without my high-vis vest on, and my overalls. But yeah, check those out. They're nearly finished. Just to remind everybody, these townhouses are in a location where second-hand housing is cheaper than new, which just doesn't make sense to us. So 7 left. We expect those to go pretty quickly. So check out those, which are being updated on our website at the moment. Okey-doke. So let's look at the new products that we've got coming up. So I was talking about the Northern Corridor as a key location. Christchurch is a funny city. It's pretty much east of the city has a lot of issues in terms of the land and the government and the council wanting to invest a lot of money in housing out there. A lot of locals that live out there, but if you look at new housing, very, very little has gone out east. And the only real areas that Christchurch can grow are north and west. North's restricted by the Waimak River, but this northern corridor or the Cranford Street extension is going to have a big impact on it. So we are in the process of packaging up 18 house and land packages in Silverstream, which is on the western side of Kaiapoi. Now, we wouldn't have looked at this 12 to 18 months ago, but there's a few key features in here that are making us not look at it, but they're making us go, what? How can you do a 2-bedroom house for $399,000? So price point here is ludicrous. I mean, $399,000 for a brand new 2-bedroom house is not townhouse, house, separate section, separate fence from your neighbours. That's just, in our world, we've never seen that before. So they're starting at $399 for the 2s, 3 bedrooms up to $449. So that's for 103 metre, 2-bath, 1 car, 1 park from $449. I haven't put the measurements on for the 2 beds, but they'll be on our website soon. And these construction are starting on these soon. There's a couple of 4 bedrooms in there from $539. Typically, 4 bedrooms are lower yielding than 3 bedrooms, which will be lower yielding than 2 bedrooms. But capital growth wise, you're going to get more in a 4 than a 3 than a 2. So it's a bit of a dichotomy. But from a cash flow point of view, a 2-bedroom unit, a house in a location like this for $399,000 will be cash flow positive from day one, which is so rare in the suburbs. And again, we don't think this type of product's going to last. And Silverstream is actually an expensive subdivision. It's got shops, it's got playgrounds, it's got a lot of people living there, retirees through to families and first home buyers. We are in the process of just getting this packaged up for our website, but the rental feedback from property managers is across the board in that they would love more rentals in here. There's very few, it's mainly owner-occupier, and tenant demand for this location is really high. So shortage of rentals and surplus of tenant demand equals long-term occupancy. And we're also trying to dig out the information, but there's a new rest home going in here with 400 beds. And on average, that typically means 400 jobs, including part-time people, full-time workers ratio in a rest home. So this makes sense. Kaiapoi has a number of small old rest homes, and with the population booming in North Canterbury, it does make sense that a new rest home's going in. So on top of current high demand for tenants, this will have a massive impact when it's built. So when you look at the drone footage and the videos on site, you'll see that this is a very nice subdivision, and it's the closest exit from the motorway when you're coming north out of the suburbs of Christchurch. So we see this as a really high sought after location because it's closer than Rangiora, it's closer than Wood End, which are large population locations. As I said, it's the closest exit on the northern motorway for a bulk subdivision. So that's Silverstream. Now I'm going to talk about a project we're also about to list in Waltham, and that's now we're back into the city, and there's 7 off the plan townhouses, OTP off the plan. So these are just about to kick off. Builders just waiting for their costings, and then they'll start construction. So this is an interesting product. They're 1 bedroom, 58 square metres, which is decent size 1 bedroom, 1 bath, 1 car park, and 1 park from $345,000. So covered car, 1 car park. I mean, I don't know how that if that was in Wellington or Auckland, you just couldn't do it for that kind of price. But again, this is a reality of Christchurch and pricing at the moment. $345,000. No body corporate. These are fee simple. It's a very quiet street with very little infill housing. And what that means is that most of the accommodation in the location is secondhand. So when you are offering a brand new townhouse for sale, you're going to have, for rent to the market, you're going to have a lot of people that want to move out of their cold 1950s, 1960s bungalow, which is what makes up most of the properties around here, into double glazed, heat pump, brand new, warm property. So that's coming up probably in the next 4 weeks, but I'm just giving people a heads up that that's on the cards very soon. Right, now we go west. So we've gone north to east, or central, now west. So we've got 2 house and land packages coming up in Rolleston, and we've picked these just because of what they are. 3-bedroom, 160 to 165 square metres on 470, 490 metres of land. So there's 2 properties in this. We like the location, we like the design, they make sense from an investor, but they also make sense in the location to get capital growth because they will be valued over time based on resales in this location. They're 2 bath, 2 car garages from 535 grand. So now is the time to buy this stock before those motorways have completed, before those roads open at the end of the year, because we expect this sort of product to start moving up. It's been flat for a long time. 3 years ago, Rolleston was oversupplied with property. All the property managers are saying now that properties are renting as soon as they're finished. So supply and demand is equalised. And when those roads open, we see more owner-occupiers going out there, sucking up supply, and more tenants. And Rolleston is the fastest in the fastest growing borough in New Zealand, many months in a row and over time since probably about 2015, 2014. And it was actually ahead of Central Otago and Auckland at one point. So this is one of New Zealand's fastest growing areas. And in our opinion, that price for that size house with the sort of specifications that come with it for us are just not sustainable. So it comes with a high fit out. There's no body corporate. This is a house and land unit title with, when those roads open, much shorter commuting times to go to work, school and back into the city. So this is another one, which is, so these ones here, they're off the plan, but they're about 3/4 finished, similar to this one. I just didn't get any photos of that site. But this one is now back into the city. So these are very close to completion townhouses in Linwood, but I call it West Linwood because it's nearly on Fitzgerald Ave. Nice little units. There's cedar and brick, and there are 5 in the complex. 3 are sold. There's only 2 left. They're 2-bedroom, 51 squares, 1 bath, 1 car park, and the developer's given an incentive where you can only pay a $10,000 deposit completion at the end of this year, late November. There's only 2 left. Existing sale, and these are cheaper than the existing sales. The other sales are between $389 and $399, and we've got 2 left at $359. No body corporate, it's fee simple. 10-minute walk to Christchurch CBD. Nice little project, and we just picked these up the other day. So that's a quick summary of some of the deals we've got coming up. We are furiously listing at the moment new stock. We put it all through a pretty stringent pressure test. There's more to come. So if you like the look of any of those properties, give our team a call, email, just send us a note, we'll get back to you. Now for the newbies on this webinar, just want to quickly say one of the things that we do for free for people. It's free to get, you can jump on our website and you need to register to get into this part. But if you register as a free member, you'll see this dashboard here on my screen. And this is basically a member's dashboard. We can look at the current projects, order an investment capacity report, order a property matching report, look at our property market updates, see what events are coming up. And the community resources page is about 40 hours of free information, free education, free, I guess, research and value that we've put together for our customers so they can become better and wiser and smarter investors. And one of those key products is what we call an investment capacity report. It'll take you about 2 or 3 minutes to fill out your information, and we will then send you a 5-page report that gives you a really articulate description of what kind of investor you are from a banking point of view. And that will articulate to you your equity, your servicing in terms of strengths and weaknesses. So if you haven't got one of these reports, I strongly recommend that you take it up because we find them an extremely good tool for us to help you understand your financial circumstances when it comes to what you're capable of purchasing in the world of property. And it's not just now, we extrapolate it out so that you can see how you look in 1, 3, 5, 10 years, 15 years time. So that's just one of the free services that we provide our customers. So check it out on our website. And one of the things we all encourage all of our customers and investors to do, just immerse yourself around people that know what they're talking about. Once you've had the investment capacity report, we've also got what's called a property matching report, where we say this is the type of property we would recommend that you buy based on your balance sheet, your financial circumstance. Lights just gone out. Saving the planet. So talk to our team about how you can get one or two of those reports. We typically find that people get the investment capacity report first, and then they say, yeah, please give me a property matching report. And these are free reports that we'll do for you, and the real eye-openers. Spend time on our website. I've estimated 40 hours. You can probably spend more than that, but there's 40 hours of free information, due diligence, detail, podcasts. There's a lot of learning on there, and there's no such thing as a stupid question. So if something doesn't make sense, please email in, call our number, and one of our team will help you understand that. The other thing at the moment, which our biggest problem isn't COVID. In fact, we actually found COVID for people and spending time on property was actually a good thing when we were in lockdown. So we're expecting a lot more people to get on the phone and email with us over the coming weeks if we do get locked down deeper than level 3 and 2. But the number one thing to do right now is talk to your broker. And if you haven't got one, we can recommend one around the country. Pre-approvals are still taking a long time. So if you want to invest, one, you need an expert broker who we can help you get or point to. And two, you need to get your applications in soon, because the delays and the backlog with these banks is getting worse every week, because a lot of people with interest rates where they are wanting to jump into the market. So please take the time to talk to one of our expert brokers, give them the information they require so you can be in a pre-approved situation. And I guess the other thing we do, we help people do property inspections, pre-settlement inspections, valuations, and property management assessments. So use all of our services to do those things. That's what we're here for. We've got the view that if we give you seriously good value at the front, you'll come back to us. And property, when it comes to being an investor, most investors want or need or typically purchase between 4 and 5 properties over 5 years, and we want to be their supplier of choice. So that's the record presentation time for me. I normally take about an hour and a half, and I've done it to 45 minutes. So David will be in shock. So I'm just going to have a look at some of the questions that we've got now, and have a bit of a read. So if you've got a question, you can click on that Q&A box, and I'm just going to read out some of the ones that David will have been answering. And let me just have a quick read, and I'll do that now. 2 seconds. Okay. Parag's asked if these are ready to occupy or off the plan. Parag, most of the ones I showed you are off the plan. 350 Colombo Street is ready to occupy now. We've got 30 plus tenants happily living in there. The ones in Russley, Riccarton Park are going to be ready in 2 months. The ones in Linwood are going to be ready in 2 months. So there's a real mixture there, and the other ones are all off the plan. Liz has asked, do tenants prefer a double garage for standalone houses? They do, Liz. I mean, if you ask me, do you want a triple car garage, double car, or single? I'm going to go triple so I can put all my bikes and toys in it. But the reality is you get what you pay for. And all of the properties that we've been selling without garages are getting a little bit less rent than the ones with garages. But what we're finding is that people are renting houses without parking, without garages, and happily doing it. And a lot of people are moving to shared commuting services, Ubers, or in Christchurch because it's flat, bikes, etc. The subdivision in Wollaston, Parag, is in, I'm having a mental holiday. It is, David, help me here. I think you may have answered it. Look, I'm just having a mind blank. It'll come to me in a second. Yes, Lawrence, the webinar will be has been recorded, and you'll get a link to that later in the next day or so. What other questions have we got here? Just looking through some. Darren's asked, what type of housing is infill housing? Yeah, I've got to be careful with terminologies, Darren, and thanks for asking. So in New Zealand, our housing stock's getting old. It's getting very old. If you think about when we were a young country, but our housing was built a long time ago. So there's two types of new product, what we call new product. The first one is greenfield subdivisions, where the government or the landowners have released a lot of land, and they sell blocks to builders or developers, and then they create sections. So that's called greenfield subdivision, where land is chopped up. And one of the things we've seen under the government's eagerness to create higher density living is they have passed a couple of changes to the housing rules. And the first one of these came under what's called the special housing area rules, where developer builders in specific locations could build smaller pieces of land to allow for smaller housing. So Auckland Unitary Plan, Special Housing Area, the Resource Management Act have all been part of this, allowing builders to build smaller houses on smaller footprints to make them more affordable. So greenfield subdivision was the start of that. Infill housing is where a developer has bought 2, 3, 4, 5, 6 old houses, demolished them, and they've built smaller townhouses or apartments on the same site. And that's what we call infill housing. And the third one of those is gentrification, where a suburb has been renovated and upgraded through infill housing, or typically renovating. And New Zealand has moved, or is moving away from renovating, because it's far more efficient to take 5 houses out and build 10 than try and renovate 5 houses, because the cost of renovation in New Zealand has just gone through the roof with inflation, monopoly on materials, and hourly rates of contractors and builders have significantly increased in the last 10 years. And the type of housing that's going on in infill, Darren, is 1 and 2 bedroom, 70 to 100 square metres, 450,000 to 650,000. And if you take some old houses in New Zealand, I know a lot of people that spend 450 to 650 just renovating their houses. And a lot of these people are now saying, well, that's not smart, let's just buy new. And it's crazy, but there's a lot of locations where we source property where it's cheaper to buy new than old. Okay. And the sacrifice is you have less land. But that's just part of, when tenants especially would rather have less land to look after than more. Okay. Can't see too many more questions. I've got one here. What street are the Christchurch ones on? They are on Hereford Street, Mark and Linda. And we can do site inspections with those. We've just got to tee it up with the builder. But we expect them, I mean, the kitchens are going in the next couple of weeks. So yeah, they're getting pretty on, and they should be all finished before Christmas. So yeah, Hereford Street. I'm just going to look up that. I should know this. Right, the mental holiday is finished. Those 2 properties in Rolleston are in Farringdon, which is the #1 subdivision in Rolleston, or it's the most sought after. Again, they will be completed in the next 3 to 4 months. And we've got a full pack that we can send people on those. So yeah, Farringdon, I don't know how I forgot it's the one of the largest subdivisions in Rolleston. So that was the answer to that one. All right, I'll just stay online for a little bit longer, and if there's any other questions, we will answer them. But in the meantime, just keep sending the questions through. Oh, Jane's asked if Rolleston's a good area for investment. Long term, Jane, Rolleston is probably one of the safest locations, and we built it because it's so large, and 20 years ago it was tiny. New schools, new shops, a big one being the inland port that the Carter family built $500 million on an inland port that runs the train between Littleton and Rolleston to distribute goods right across the South Island. So in terms of safe locations long term, you can't get much safer than Rolleston. And from that point of view, prices at the level they're at now, we don't know, they couldn't go down because land's going up. But in terms of, we believe we're at the tail of these prices. We don't think they'll last. We think they will go up. And that means, getting in now, up for the last year and a half, we've been recommending people buy in the city. But now we're saying, hey, it's time to actually look in the suburbs. And you'll see more and more suburban house and land packages coming out of our website over the coming weeks and months. So yeah, Rolleston is a good place to invest. And yes, Parag, typical deposit for any of our properties, which sits in a trust account, is 10%. Sometimes we'll get it down to 5%, but most of the time it's 10%. What else have we got? Lawrence has asked about property management. We've got a number of different property managers, but Max Property Management are one of our go-to ones. They've done an exceptional job in the townhouse and apartment space in the city, and they're our main partner that we recommend people use. So getting some good questions here. I'll keep on and I'll keep answering them as they come through. So keep sending them through if you're still online. Hopefully this has been useful. I mean, it's a short webinar, but I think if we're going into lockdown, we will be doing more and more of these. All right, I'm going to wrap it up in a second. There's no more questions. We'll stay online for a little bit longer, but yeah, look, if I summarise what we covered today, we just can't see any logical reasons why Christchurch, specifically in all areas, but especially house and land in the suburbs, we've been waiting for it for a while, but the roads finishing in the next couple of months are the triggers for us. We see prices increasing. And if you look at Canterbury region across the board, it's moved 14% in the last 12 months. And we haven't seen it in the investment space yet, and we're expecting it to. So we're doing a really sort of last call that don't expect these prices to last. So, and with interest rates continuing to drop, we just think it's one of the best times to invest in this city. It's safe from a construction, you've got the latest technology. It's safe with a growing population. The pool of tenants in Christchurch is, I mean, I think all the tenants should buy, but they don't. Often they don't want to, often they don't have a deposit. And I'm torn with my social hat on because I wish more people would go and buy houses. But they a lot of people like renting and not having to think about home ownership. So internationally, the percentage of people renting is actually great. It is growing over the percentage of people owning. And we're in a climate where it's never been so easy to own your own home, but people aren't. So if you bought a house today in Christchurch or Canterbury, you're doing it in a rising population, a rising market for price based on most commentators that I speak to and experts, and with interest rates at historically low levels. Add the component that the city's only going to get easier to get around with these new extensions and these motorways, and all of a sudden you've got the perfect storm for purchasing. So I reckon this time next year we'll be sitting here saying, oh boy, people will be saying, I wish I'd bought. So now's the time to buy. We can help you make a good and informed decision. It's what we do, because we work on the basis that if we help you today get into the best property, you're going to come back to us. And if it's your first time, we are patient and we'll work with you because we know it's a scary thing buying your first property. So yeah, we'd love you to work with us, and we will do everything we can in our power to help you make good informed decisions and make sure that you can become seriously smart, savvy and safe investors to build a rental portfolio to live off in retirement, because that's what it's all about. It's a business. So I will stay on for a little bit longer, but I will say good evening and have hopefully this next few days with the government doesn't put us all back into lockdown for very long. But I think they're doing the sensible thing. And I guess one of the things we learned with lockdown 4 and 3 last time is that we are a very digital business, so you can still communicate and transact with all of our people. We have a very cool digital signature process now on sale and purchase agreements, so you don't actually have to print anything with us. And it's all compliant from the Auckland District Law Society, the Real Estate Authority, and the Real Estate Institute. So, yeah, we're a pretty digital business, so COVID won't stop us from doing business, apart from valuers and property managers when you get to that point. But now is the time to do your homework if you're going to get stuck at home for a while. So have a good evening, and hopefully see you soon on one of our building sites or one of our project releases, and look forward to taking you through them.